just start with what drove the quarter itself. Obviously, grain shipments are strong. Your top line was strong. Turned into pretty strong profit growth in the quarter. Is that repeatable for you?
It is repeatable. So last quarter, we had good volume growth. The operation were very fluid. We've had, you mentioned grain. Grain is rock solid. It's been rock solid since the beginning of the crop last summer. And just in January, we already are at a record high movement of tonnage of grain at CN, despite the fact that the month's not over yet. And lumber for construction has been good. The port business, the way consumer consume today and what they consume is very, very favorable to our intermodal network. So we had very strong result on anything that moves, reefer service, a temperature service, anything that comes from the port, construction related. And overall, we're optimistic about this year, especially as it relates to the second half of 2021.
So let's dig into that optimism a little bit. I understand you see significant tailwinds for 2021. Just put that together for us. What's driving the potential upside you see?
So already, like you would see in the month of December, the month of January, the port business is still very solid. The intermodal business, as it relates to consumer consumption, is very solid. Lumber and construction product is still very solid. Grain is super solid. So, and propane export, things related to temperature are solid. And as the economy pick up, especially as we eventually come out of the phase of COVID and vaccination, probably we want to see what the first quarter will offer in terms of, how we all progress as a society to be able to deal with the pandemic. But as the year goes on, especially in the spring, the second half, we should see most of our market really coming back up, namely industrial production, manufacturing, and the likes, export business as well. And maybe the only thing that will remain a question mark is crude and refined product. We'll see what these two markets do, but many reasons to be optimistic. On the productivity side, I think we mentioned that on the call yesterday. We have a number of levers that we're working in terms of overall efficiencies, in how we run train, how long we run the train, and productivities of people. So, running the two levers of the demand, the pricing of the demand and the cost sector, good reason to be optimistic about 2021. We want to see what will happen in the first quarter. I know we want to see what's going to be happening with COVID and vaccination in weeks and months to come. But with all the effort our government are putting together, that has to be able to get itself sorted out by the time we get to the later part of the year.
What is your expectation? I mean, we've had what feels like a bit of a slower start than many had hoped on the vaccination front. We know the Bank of Canada is now saying first quarter may well be a little tough. Are you bracing for that? I mean, that you'll continue in pandemic style through until at least second quarter?
So my comments here are more about not so much the demand, is more about how it might impact our operation. Because the demand at CN right now is very solid. We're running close to 8-9% volume growth, measuring revenue ton mile as we speak. So there is demand in the market I just mentioned earlier. It's a question whether or not at some point it might affect our workforce. So we do have enough capacity in terms of people and rolling stock to meet the demand in that rate. But our employee needs to be healthy, and we can only have so many of them in the 14 days of preventive quarantine. So the impact of the COVID on our workforce is something that we're watching closely. I think in terms of the overall demand, between intermodal, port business, consumers, consumption, grain, lumber, the market I mentioned earlier, we're fairly optimistic and constructive on the demand side. We want to see on the impact on the employee and operation whether we will have challenge sometime in the first quarter.
We hear talk about even further lockdowns, interprovincial travel restrictions being imposed, Manitoba, the latest to do that, potentially new federal travel restrictions coming. One of the reasons the Prime Minister has cited to be cautious about closing down air travel is that cargo moves with people. Is there any opportunity in rail there, or has all of that kind of the shifting of the supply chain already happened to the extent that it will?
Yeah, I think it's basically, I would say, neutral. It's really at the margin. What moves an airplane is very time sensitive, very high quality, high price, I'm sorry. So the substitute would be moving them in ocean cargo. That takes weeks. So I think we're more bullish about the industrial sector, the natural historical sector of the rail industry, and not so much on displacement from air freight. I would imagine that this issue of air freight will get itself sorted out. There's other ways to move air freight other than just passenger plane.
And when you think about your own employees and your own business and that demand returning to normal, the economy returning to normal, would you welcome further restrictions? Do you think we've done enough in Canada to really clamp down on the virus?
I think I would leave it to the authority. Definitely, we need to control the pandemic, and whatever is required, but from a travel point of view, a vaccination point of view, or lockdown point of view, whatever is required to make sure that we actually make progress toward a more normal life and toward a more normal economy is constructive. Now, what is it that needs to be done? We'll leave that to others. What's important for us is we monitor closely the impact on our workforce, and having COVID case, making sure that we try to trace quickly who they've been with, and we have those employees being taking quarantine themselves, and then whether or not eventually that might have an impact on running train. But at this point, so good. As I said, at this point, we're running close to 10% volume growth year over year. So there's demand, and there's also equipment and people to meet the demand. So we'll see over the next few weeks. Hopefully, there will be progress on fighting the pandemic.
And one thing, JJ, we've seen today is you are offering up high single-digit profit growth next year. The market seems to be less than thrilled with that. Some analysts is below what they were hoping to see. What are you telling analysts on the street about what you're doing?
Yeah, so we had a very solid fourth quarter of last year. We basically telling them, allow us to see how the first quarter goes in. What might be the impact of the pandemic of COVID. Let us monitor the first quarter. We're optimistic for the second half. We have a number of good markets that are producing good results. The Canadian dollar is at 78 cents right now. When we issued the guidance, we were using 80 cents. And as you may remember, last year, the Canadian dollar was more like 75 cents. So there's 2% of EPS growth at CN related, whether you use 75 cents or 80 cents. We'll see how the Canadian economy is sorted out in terms of its exchange rate. But it's early in the game, right? We're in week 3 of 2021. We all would like to see a very strong economy this year. We're optimistic about it, but we're a little more cautious about Q1. So I think it's basically in good spirit that we provided the guidance that we think that we can definitely deliver based on what we know right now. And as the quarter progress, we'll see what else will be in store for a company like CN.
And of course, JJ, along with that operating ratio, one of the key metrics for you will be market share. Where do you see potential for growth? Is it inside Canada? Is it trans-North American?
So I wouldn't use the word market share, but I would use definitely volume growth. Part of it comes from the economy, the recovery of the economy. Part of it will come from industrial production. Part of it is cross-border, Canada, U.S. I would think that U.S. economy will recover. It might recover more quickly than Canada. They might be 3 months ahead of us, and that's good for demand cross-border. About 1/3 of our book of business is related to movement between Canada and the United States. Our operations are very fluid, so when demand picks up cross-border between Canada and the U.S., we will be able to exploit that. And the demand from the port is already super strong, right? When the economy came back last summer, it came back as a V-shaped recovery. Actually, a number of vessels that used to go to U.S. port, namely like LA Long Beach, started to come, toward Canada. These containers, we attracted so much business at the Canadian port of Vancouver and Rupert that in itself is, I'd say, maybe too much a good thing. So the economy at this point offers a number of levers. We also have a number of levers on costs. And when we're past Q1, and we'll see how the pandemic evolves, especially in Canada, but also in the U.S., I think we're optimistic about 2021 overall.
I want to leave with this question, which is we've heard already from President Joe Biden on one pipeline. We know that there's a moratorium on new leases on federal land, on drilling on federal U.S. lands. Is oil by rail a growth business for you? Do you see more of that in your future?
Yeah, just generally speaking, everything Mr. Biden is doing right now is what he explained in glory detail during the campaign. So there's no surprise. He's just basically confirming what he said he would do. In terms of pipeline, CN, broadly speaking, whether it's natural gas or crude, we're in favor of a pipeline. I think what's good for Alberta is good for Canada, is good for CN. It generates GDP for the country. And then on the crude by rail, the pipeline was not going to be ready before a couple of years. So I think the positive impact on us might be a few years down the line. And the interest of CN on crude is especially as it relates to non-diluted crude, the crude which is actually more viscous, safer to move. also that is of different type that moves in pipeline today.